Hello, good morning, everyone. Good morning, traders. Good morning. Good morning. I believe you guys can hear me. Let's welcome ourselves to another exciting morning market review. Morning market review by Rally Trade Rally Academy. If you're joining us for the first time, we do this every trading day. Every trading day, actually, Monday to Friday. One solid hour of market analysis we give you here. We try to look at tips on how you can navigate the market. We even go further to give you some tricks on how you can be successful on your journey as a trader. So guys, I want to believe the market has been kind to you. The market has been doing you well. The market has been hitting your take profit and not your stop loss, guys. Come on, guys. I want to believe you have been doing well, guys. If you have not been doing well, the difference between you or the differential between you and where you want to get to is knowledge, more knowledge, guys. And thank you for joining us every day because this is a platform where you get more knowledge, more skills, more market direction, knowing the market direction so that you can be always be profitable, right? Now, when we say always be profitable, it's actually about net profit, right? So you position yourself in such a way that at the end of the day, at the end of the week, you're always making net profit, net profit. If you are not, go for more knowledge. Try to look at your account history to know what you have not been doing right so that you can adjust, make necessary adjustments, and of course, start doing right and start doing those things right. If you have been selling at the wrong position, if you have been buying at the wrong position, when you place a trade and the trade goes right, fine, you go back to the trade and check, what did I do right? What are the indicators? What are the things I put together to be able to achieve this good result? If you place a trade and the trade goes bad, you do the same thing. You go back to the chart and check, what did I do wrong? What are the things most person, once they place a trade and the trade goes bad, they will just get angry. No, sir, you remain at the same spot. But if you place a trade and the trade goes by, you go back to the chart again and check. This will actually enter the trade and the trade move in this direction. Why did it move in this direction? Okay, tested this level for 2 or 3 times. Okay, fine. That means next time I will have to improve. By so doing, you are improving. You're improving. Now, enough of the rant. Let's now start. Guys, my name is Emmanuel Udogu. Okay, for today I'll be the one my voice will be hearing throughout from now till night. And it's probably going to be very exciting, very intriguing, very wonderful, and very good. Guys, welcome once again. All of those rants is so that we can get more persons into the room. Okay, this room is really going to be hot for today, guys. It's really going to be hot, guys. So we have the chat room also. If you have a question, if you want to communicate with me, if you want to say something, if you're not hearing me well, if your internet is not too strong, anything you want to do, you can get to the chat room and drop me a message there, guys. I'll be so glad to hear from you. This is Emmanuel once again reaching you from the beautiful city of Port Harcourt. Port Harcourt is very fine, beautiful. So guys, let's get started. Like we always do, we try to look at the fundamentals. Fundamentals. Just like the name implies, fundamentals. They are the main thing, the in thing that drives the market, right? So we look at those microeconomic indicators of different economies, especially the major ones, right? So know, hey, what is driving the euro? What is driving the dollar? So there's several websites. I will not waste too much time on that one. I will not use too much time on that one, right? I didn't do sound check, but I believe you can hear me. The rant is part of the sound check. If you're not hearing me, you would have said, hey, I can't hear you. I can't hear you. So guys, you guys are hearing me. So real quick, let me share my screen so that we can do some fundamentals, right? So we go straight to Forex Factory. You can use investing.com. You can use Reuters. You can use CNN. You can use my FX book. You can use FS Street. You can use Trading Star. I like that one. Trading Star. That one will just show you how the big players are positioning themselves. I mean, the dealers and of course the hedge fund, the leverage funds, how they are positioning themselves. So guys, quickly for day traders like us, like you and I, let's go to where it has always been broken down for us. That is the forexfactory.com. So I am on Forex Factory right now. Let me do share my screen real quick, guys. Follow me quick. So I'm about to share my screen. I've not shared it. About to share. I've not shared. About to share. I've not shared. So I've been able to share my screen right now. This is Forex Factory, guys. So this is Forex Factory for today. But like I always do, you click on this word, calendar at the top, mid top of the screen. You're going to see the activity for one whole week, right? And of course, it shows you the calendar by the top left so that you can navigate from week to week in the month, in the present month, that's February, right? So if you look at the top left, you're going to see I'm looking at the activity for the whole of this week, right? And of course, we have another week here, okay? So the whole of this week. So today being the 20th day in February, blessed month, guys. So then, of course, join us tomorrow again. We're going to look at what will happen tomorrow. For tomorrow, we have a lot of red news, right, for Friday. But then for today, guys, today being the 20th, okay, this is 20th, right? Fine. This is 20th, okay? So today being Thursday 20th, we have unemployment change there, right? 1:30 a.m. That one has already rocked the market, right? That's on AUD. Then, of course, where are the red news, guys? I'm looking for the red news. Okay, I've seen one. Okay, this one is actually a weekly event, a weekly news. That's from the US. There, the unemployment claim, those filing for unemployment benefits. You remember this time around they do it every week. Okay, every week. So and the impact will also be there, right? So dollar might just find a way to sneak in more strength from there because if you look at the chart right now, you can see that dollar actually needed that strength, right? So it might just find a way to to push in more strength, especially Euro USD, GP USD. Dollar actually needed to do a quick comeback, and I'm sure it might just be able to do that, right? So that's by 2:30. Man, there is no red news here. So, but today we have crude oil inventory also. So, first on the crude oil side, expect that market to go up depending on what is in the inventory and, of course, the actual data, right? Then, of course, by 11:30 p.m. Nigerian time, most guys are already sleeping. We have Reserve Bank of Australia, Governor Bullock speaks. Of course, that one will be a non-data news, right? Don't forget the information you see here, they are both data news and non-data news. So the data is at the far right of the chart of the screen of the website. So the far right, so this far right is the data, right? Which include the actual data, the forecast data, and the previous data. So if we have a news without any of those information, I call that non-data news, okay? And those include speeches by president and of course with uh, minutes of meetings, speeches, they all fall under non-data news. Okay, guys, it simply means for today, it's only the US dollar in the midday that we're going to see, right? Then the rest will just be fully relied upon on technical analysis, guys, technical analysis. So let's dive in quick to our chart so that we can do a lot of analysis. So you tell me the kind of analysis you like. We'll do that type of analysis for you. Some of you like to trade trend lines, some of you like to trade Fibonacci, some of you like to trade what else again? Support and resistance. Some of you just use solely your technical tools like your indicators. All of that, make sure you're making money. Or you can even use Confluence. Confluence means you can combine one, two, three of all of these things and put it together and use a Confluence. So if you prefer Fibonacci, sometimes when you trade, you see a trade signal with your analysis. You may want to use other technical tools to confirm it, right? Because several trades, there are different traders on the market are using different technical tools, right? And you want to buy where they're equally buying to have a higher confidence, a higher probability trade, a trade that has a high probability of a win. So that's the reason why we use Confluence. So let me do a quick share of my screen, guys. If you're ready, I'm also ready. I'm also ready. So I've been able to share my chart, guys. You can see my chart, right? You can see my chart. I've been able to share my chart. You can see my chart. Don't deny. See my chart. All right, guys. So we should be able to look at gold today. Gold is really rocking to the upside, right? Gold is going to touch, as we know it, gold is going to touch 3,000. So all of those opportunities gave coming down, coming down, coming down. The opportunity for more buys. So any opportunity you see it coming down, rocking the support, a known support, a 4 hours time frame support. For example, all of these support areas are opportunity for the buy. So I'll come to gold, but before that, let me do my precious US dollar, guys. You know how we go here, right? Always look at the US dollar. Okay. So the US dollar, remember we always promise to give you reviews of what the market have done, right? And what the market is doing, right? So for the US dollar, yesterday we saw the dollar trying to do a comeback, right? Right, the dollar trying to do a comeback because the dollar closes bullish yesterday, so which is good, right? Which is a good thing. This is it, closing bullish, and this actually is spinning back, right? So the dollar actually closed bullish yesterday. This is a daily time frame. So the dollar closes bullish, and if you close it bullish, it simply means we are gradually seeing some strength that is trying to come into the dollar, right? Some strength, some strength. So, but a day before yesterday, being which day was that now? On Tuesday, it also closes bullish, right? Because also closes bullish. So we are seeing some strength coming to the dollar. But remember what we know about spinning bar. Spinning bar is more or less uh, it has to be a double candlestick pattern, right? So spinning bar standing alone may just stand for indecision. So if you need a confirmation candlestick, the next candlestick that follows it should tell you what the market wants to do, right? And of course, I'm sure you know a spinning candle. So this is a spinning candle. Long wick up and down, small body at the middle, call it a spin, right? So it simply means the market is about to spin to either direction, either the upside or the downside, but it only needs a confirmation. So this is daily, right? This is a daily time frame, right? So the confirmation is actually the candlestick that we're having for today. So if this candlestick closes below this low, right, simply means that the market will not to go down. That's what it means, right? So if it closes below the lower part of the spin, right, and the lower part of this spin almost coincide with the low of day four yesterday, right? So if it closes below this low for today, that's a confirmation for us already that the market is still going down. Remember, on this daily time frame, this is still considered a downward trend, right? Don't forget on this daily time frame, this is still considered, this is daily time frame. Somebody will be wondering, but Emmanuel, why are you looking at daily for today? I thought you normally stop at 4 hours. Now, you can equally consider daily, depending on the spirit leads you, actually, depending on what you're looking for, right? So I'm going to expand the analysis a little bit. I hope you don't mind. That means I'm taking it to the higher form, right? So swing traders will actually need this type of analysis to say, is the dollar still weak, right? Is it still weak? Is it still weak? Look at this analysis I'm doing for you. It broke structure to the downside, as you can see here, right? So this candlestick, if this candlestick closes below our spin, it's an indication. If it closes below our spin, it's an indication that the spin has been taken out, and of course, the market has closed below the low of yesterday. And of course, it only means the market has closed below the low. So most times you will need to come to the daily time frame so that you can clearly see the lows and the highs. Remember, in trading success relies on you knowing the low and the high and looking out for the market trading below the lows and the highs, because that is a sign of momentum shifting to the upside or momentum shifting to the downside, right? And of course, if momentum shifting to the upside means momentum at the downside is losing. The market is losing momentum to the downside if the market is shifting momentum to the upside. So that is the information we have for today. So that means we are seeing yesterday as number one, a sign of strength into the dollar. The number two, it could also be today will actually show us what the swing traders will be thinking of, right? So if it closes below the low of yesterday, simply means the market is in to go down. But guys, if it closes above the high, remember, if the market wants to go high, it will first need to create a low. Of course, that also means the market is trying to create a low right now, right? So if the market wants to go high, it will first need to offer discounted price to attract more buyers, so that if they are interested in that low price, they keep on buying, and from there has the momentum to move up. So don't forget, for every time the market wants to go up, it will first go down before it goes up, right? So every time it wants to go down, it will first go up. So this may just be a down move. So for now, it's a little sketchy, but then let's drop down to 4 hours time frame real quick. So guys, 4 hours time frame, we're almost seeing the same thing. Okay, 1 hour time frame, we saw some strength into the dollar yesterday, being that it closes above the opening price. That's some strength into the dollar. Don't forget, that's some strength fused into the dollar. Then on this 4 hours time frame, we are seeing a clear support originating from the opening price of yesterday, which simply means this area will be a difficult area for the market to break. And if the market has a difficult area to break, guys, it may just start moving up, right? So this area is the area that the market has to break before we are confident that it's going down, right? It's confident that it's going down. Otherwise, we are clearly seeing for intraday perspective, we are seeing the market giving us new highs. I mean, this is Monday, right? Still Monday, Tuesday, Wednesday, Thursday, right? Monday, we saw it moving upward. Tuesday, moving upward. Wednesday, moving upward. So the trend, as long as we are concerned, day traders, we are seeing dollar having some strength, right? Gradually. But something about this trend, the candlestick are just so choppy. That means it's actually struggling, right? Now, let's start from Euro USD doing our analysis. So, guys, on Euro USD, what can we say here? We saw the dollar trying to gain some strength, right? Monday, Tuesday, Wednesday. And that's what we have here. This is Monday, Tuesday, Wednesday, Thursday, right? So let me drop this line for us here. This is Monday, right? This is Monday, Tuesday, Wednesday, Thursday, right? So that means for what we are seeing on Euro USD, most of us here are intraday traders, right? I mean day traders, okay? So the chart is clearly showing you a downward trend. Of course, you know what it means. It means my buyers will not be to sell. And the chart is so beautiful that is so beautiful, guys. I don't know how to say it again. If you look carefully, you see that my moving average have converged here, of course, has even turned, right? So I'm having what we call this strategy called guard course, right? So what we have here is a dead course. So we're having a dead course right here, and of course it means the 21 period moving average is currently trading below my 50 period moving average. That simply means the market is on a downward trend. Guys, if the market is on a downward trend, what do? Look over here. Last week the market was on an upward trend, right? Beautiful market, I can tell you that. This is Tuesday, Wednesday, Thursday, Friday. From Tuesday, we saw that the market turned to an upward trend, and of course, not till Friday. And of course, the same thing is happening here, guys. It means look for opportunities to sell. We want to sell this market, guys. So opportunity to sell is what I'm looking for right now. So I'll just look for an area where I think the market should be able to sell without an inducement. Now, this area might just be the area where the market would like to sell. So always give opportunity for the market. Even if the market creates an inducement, I mean, if the market brush through this area, then of course you should have a second entry area, right? Or you have a second area, or your stop loss should be robust enough, right? Robust enough, depending on your capital anyway, to hold it. So these are the areas I would like to. Now, if you watch, I'm trying to highlight this weak high, right? And that's the weak high, the high of that week. So these are the areas I would like to do a sell, right? So simple analysis, the market is going on a downward trend. If you like, you can even put a trend line. Those of us that likes trend line, right? So if you're doing the right analysis, it flows. I can tell you that. Is this a trend line? Of course, it's a trend line. So the market is on a downward trend. But remember, the market is on a downward trend, it can give you an inducement, forcing you to want to sell here. So that when you said push up to the upside again, don't be afraid. Let your heart not fail you. So this area might be the liquidity point where we're looking at, right? Or if the market uses this area as our inducement, means if it pushes up further, then of course this area becomes the main area. But guys, guess what? If the market comes inside this environment, guys, I'm ready to sell this market, right? I'm ready to sell this market. So I'll be selling at this price. Let me give you the range of price. Actually, the range, right? 1.0439 to 1.04341. So it's a range around this area. So if you want to screenshot this, guys, this is the area you would like to sell. So I think it's very clear for all of us intraday traders. Let's move to GBUSD. If you have questions, please drop it for me, guys. So GBUSD real quick. So guys, GBPUSD. Now, if you have questions, please drop it. Drop it. Go straight to the chat room and drop a question there. I'll be so glad to entertain them, guys. And he said I should check Euro JP. Of course. How do you know V? I wanted to go to Euro JP one. A lot of things are happening there. a lot of things are happening there. Euro JPY. He said it in my mind. Oh my goodness. So guys, let me look at GBUSD and what can we deduce from this. So you follow me through that analysis on the intraday analysis actually. But remember, we looked at the daily time frame. We saw a spinning candlestick. I will say that spin for yesterday. I'm giving you previews of what the market have done, right? So we saw a spinning candlestick of yesterday. The day closed as bullish candlestick on the dollar index, and we said, hey, we are seeing strength infusing into the dollar. But guys, guess what? That candlestick we see the spinning candlestick. That means the whole of today will still serve as a confirmation for that spin. And now bringing that information into today right now, what can you say this instrument is doing? So we saw the instrument GBUSD giving us what we call a range, right? It has been ranging for some time. So let's look at the range. So I will admonish you guys, you have your, excuse me, you have your chart before you every day you want to trade, looking at your chart. You should be able to do some of these drawings, learn these drawings, like these rectangles I'm drawing. I'm using them to identify areas where the market will most likely do a reversal, most likely push to the upside. So it makes trading easier, right? So you now see it clearly, right? So do you mean this market has been on the range? Of course, sir, right? So this is the range, right? This is actually the range. So if this is the range, so what is this? This actually is spring, right? This actually a spring because it has moved back into the range. So a spring is just one leg, right, that pushes out of the range and quickly returns back into the range, right? So let me even adjust it very well. So sir, this is actually our range, right? So the market has returned back to the range. So if you must trade here on GBUSD, please note that the market is in a range, right? So if it's in a range, what does it mean? It means the market is at the lower part of the range, right? It's about to push to the upper part of the range, right? It's about to push to the upper part of the range, right? So this is what happens during ranging market. So it pushes down, as you can see. Then, of course, from there, it pushes up, as you can see. So being able to identify the current state of the market gives you an advantage, right? So if your friend calls you right now, hey, you trade with Rally Trade. I heard Rally Trade is one of the best broker in Nigeria, their education is top notch. So tell me what is happening to GPUSA right now, guys. GPUSA is on the range on intraday perspective. Then you have passed it. You have a pass mark there. Oh my goodness. So if it's in the range, what do we do, sir? So you agree with me. Now, those of you using phone to trade, sometimes it may be hard for you to see all of this. So one thing you want to do is keep your phone on the landscape, right? You understand what I mean? I mean, turn your phone now. The phone naturally comes in portrait dimension. So turn it like 90 degrees to your left, right? It becomes landscape, right? Then, of course, you want to maybe zoom out, zoom out, zoom out so that you can see enough information. That's what I'm talking about, right? So at every point in time, oh, okay, I'm looking at the comment section. So at every point in time, you should be able to know what the market is doing, right? So right now the market is in the range. So if it's in the range, now just mentioning range, you should know what to do, right? It simply means you only sell at the resistance up here and buy on the support, right? You sell at the resistance, you buy on the support. Now the market has given us a spring, right? A spring. Now this spring could just mean that it's about to resume the upward trend, right? It could just mean that it's about to resume the upward trend. Because remember, the market was on an upward trend, right? On an upward trend, they got into this accumulation phase. So we can call this an accumulation phase. So usually up to 70% of the time, if market is on an upward trend and goes into accumulation phase, usually close to 70% of the time, it may just resume the upward trend, right? It may just resume. So that is still in the forecast phase of it, right? Trying to do a forecast right now. But in this particular range, you buy on the support, you sell at the resistance, buy on the support until there is a breakout. But then we have seen a false breakout here, which could also support the claim that the market may just be pushing to the upside. Okay, so Mr. Tolu, you're asking, please, how do I learn this drawing on my phone? It's very simple, guys. Very, very simple. Go to drawing on your phone. You should be able to do it. So that we don't use a lot of time trying to show you how to do drawing. I'll drop my number at the end of this session. You can call me. So you can call me, Mr. Tolu there, and maybe I will show you one-on-one, okay? Because it's just drawing. So now, it is still right on the support. One may want to do a buy right now, which is not bad. But then if you're looking for, if you want it more conservative entry, right? Okay, so this is my 21 period moving average, right? So once it moves above my 50 period moving average, that will be a good time. If once 21 move above 50, then you may just want to do a buy there, okay? Now, until there is a clear breakout, right? Until there's a clear breakout. Now, this is why this is not a clear breakout, because see the candlestick closes below the range, right? But it did not open above. So for you to say the market has broken out, it should be able to open and close below, right? So guys, if it breaks below this area, so let me give you a particular area. I think if the market trades below this area, then of course one would like to start doing sales, right? So look at this low right here. This low, there's actually a fair value gap back here. So this low, this particular area might just be a juicy area for USD, right? This area. So I took this from far behind the left hand side of the chart. So this particular area, please, you want to mark this area on your chart. This area, mark this area on your chart. So if the market trade below this area, then of course it means it has broken out. If not, it will keep giving you false breakout, right? Or otherwise, if it breaks above the high, then of course you want to resume your buys, right? Now let me go straight to Euro JPY. 。 . 。 . 。 . 。 . 。 . . 。 . . 。 . . . . . . . . . . . . . . . . . . . 。 . 。 . 。 . 。 。 . 。 。 . 。 。 . 。 . 。 . 。 . 。 . Okay, Mr. Eddie, you're saying the price didn't drop despite the inverted bearish hammer, right? Yeah. That's true. That's true. But then it got a confirmation, right? It dropped now. Just after that, it dropped. But the kind of drop you're expecting is not the kind of drop the market did. So that's why expectation management is key. So you are saying despite this inverted candlestick here. Let me even measure how much it dropped for you so that you can see. It actually dropped, right? But let's see how much it dropped. Now that drop is about 24 pips. So, so you can see that it actually dropped. So it's 24 pips a drop. Of course, it's a drop, right? Dropped. Those that trade with very huge volume as 3 standard lots, 5 standard lots, once they see 15 pips, man, they are out of the market with that amount. But of course, before you can trade with that kind of big volume, you should be able to fund your account also with a big amount too. Okay, so let me do Euro JPY. Someone said we should look at Euro JPY. So this Euro JPY have been very, very adamant rise to the upside, has been struggling to move to the downside, as you can see. So clearly speaking, this instrument is now rocking the support. If this instrument was not rocking the support, I would have said, let's say, I'm telling you, would have been selling on it, but it's rocking the support right now. So now keep an eye on Euro JPY, right? It could just be a place to make good money. I mean, if the instrument trade below this area that you want to sell, so I've given you one quick liquid money right here. Let me extend it. So just screenshot this, right? So if this market trade below this area, if it trade below the area, I mean, if it breaks this area, okay, you should start selling. You should start selling. Start selling quickly. So on the daily perspective, this is still consider the big money is still looking at Euro JPY as an instrument that is trading to the downside. On the daily perspective, the big money is still looking at Euro JPY trading to the downside. Okay, don't forget this is January, right? January, the big money. Please, when I say big money, I mean the leverage fund, the hedge fund, those big guys, those banks, right? So this is where Euro JPY opened for the year, opened at 162.802, and right now it's trading at 156, right? So that means Euro JPY has done how many pips right from the opening, right from beginning of the year. So from beginning of the year to now, Euro JPY have done over 600 pips, right? Over 600 pips to the downside. Over 600 pips to the downside. So if you look at it carefully again, you will see that this instrument is clearly using the tenets of market structure, breaking structures to the downside, retracement to the upside. So you can tell that this low becomes our target liquidity. Let me even push it down. So this low becomes our target liquidity. How do I mean by target liquidity? If you look at it very well, it's actually our juicy liquidity right now, the liquidity that is ready to be taken, right? So liquidity is actually money, and liquidity rests above the highs and the lows, right? So look at this low right here. This low is actually a liquidity, right? Or it was a liquidity because it has already been taken. Now this is also a liquidity, right? This high is also a liquidity, right? So this high is also a liquidity. Now, by the time we start going into deep analysis like this, we might just stay on Euro JPY and then 1 hour will just be over. But then, guys, let's learn something new, right? Now, if you watch carefully, this market did not take out this high, right? So that means this high is not the liquidity to be taken. I mean, this liquidity is not the money for to be taken. But this one is the one to be taken. So that simply means, so if the market is taking the liquidity at the downside, it simply means the market has momentum pushing to the downside. This is one way you can know what the big money are doing, right? So this is another low right here, and the market took out this one. So guys, but this is a high. This is a high. right here. So the market hasn't taken out this high. So that is why I can tell you that this low is the next one the market would like to take out. So if you have a sell on Euro JPY, okay, leave your sell running. Leave your sell running, okay? Leave your sell running. If you have a sell on Euro JPY, leave it running. So that means I'm trying to say this market, Euro JPY should still fall down to this area, right? To take out this low to this point, right? So that means we are expecting a further 124 pips, just call it above 100 pips movement. So now this analysis is on daily time. So let me drop down to, no, I'm not the one dropping down. I cannot go down. I'm dropping the chart down. Oh my goodness. Yeah. So that simply means if this particular level is taken out, we are expecting we're expecting Euro JPY to still pump downward up to uh-oh, should still move downward up to another over 100 pips, right? That's when you can tap the liquidity. Now for it to take this liquidity, it needs to do another on 100 pips, guys. Now, but then we have a level here the market may want to do a little retracement to before going downward, right? So before it will do that, it is either the market does that or the market may want to retrace a little bit before doing that, right? Now, remember, in analysis, we try to forecast where the market is going now, but the pathway leading to that direction is what usually is a bit sketchy, right? So we are saying the market will go down. So it is either it does something like this or it retraces and then push down to the downside. So these two are the direction. So Mr. V, I think you're the one that asked me to analyze Euro JPY. I've done that right now. So you have it right on your laps right now. Enjoy it, enjoy the profit on it. So I think we have done which other instrument do you want us to analyze, guys? Okay, I'm seeing USD JPY, but we just did Euro JPY. That's the JPY there. Okay, now let me do US JPY, then I'll move to US 100. Okay. Okay, Mr. Olarinwaju saying we should look at US 100. Okay. We've not looked at gold, though. Gold that is trying to break all the roof. Mhm. If you are not buying gold, what are you doing? You are wrong, but then don't buy at the resistance. Oh my goodness. Now let me look at GBP. Let me do USD JPY because let me honor that request here. USD JPY, USD JPY. And USD JPY. So this is USD JPY, guys. So USD JPY. Now let's look at it from the daily time frame also. So from the daily time frame, we can say the same thing about USD JPY. Yeah, right? So if you look at it, that the instrument, if you look at it carefully, you will notice that it opened around here in January, right? So the same thing, it has gone down. So that means the JPY, the instrument JPY has been a very strong currency from January till now. So will it continue now? Now that is why it's good to know the trend, right? So that you continue to ride it. You continue to ride it. Sir, from beginning of January till end of January, JPY was strong, right? JPY was done. So at the end of every month, you want to go and look at what has happened to your choice pair, Like somebody is asking right now, say, Emmanuel, what instrument do you trade the most, right? Mr. Eddie, what instrument do you trade the most? So the instrument I trade the most, I focus on the majors because jack of all will always be a master of none. So I focus on the majors, GBP, USD. The instrument I analyze for you are the ones I trade, sir. Because that's where I have a lot of power. So I trade Euro USD, GP USD. I do Euro JPY. I do gold. I hardly trade oil. So you can see I hardly analyze oil. But I can open it, use market structure, and give you what is happening there, right? So this is a clear downward trend. So it simply means if we now, but then there is a challenge. This is the challenge. Remember, you always trade looking at the left-hand side. This is the challenge. So that means the market is rushing towards this level. Now, but what was this a target liquidity? Of course, this is a target liquidity. Mm. So, and the market have taken it out already. Was this also a liquidity? Of course, but it was not a target liquidity, right? So this is a protected liquidity, whereas this one down here is a target liquidity. So that means the market is going to the downside, right? So what I'm doing for you is just a top-down analysis. So it simply means almost the same analysis with the one we just did, but you notice this market has already crushed this target liquidity. But on Euro JPY is yet to crush it, right? So it's even a sign that the market is going to crush it. So that 100 pips on Euro JPY, the market is actually going to achieve it, right? So this one, it has already achieved it. It has already crushed it. So remember, after crushing it, the market will need to do some level of retracement to the upside, right? So this is what we have here, impulse to the downside. Okay, then retracement, a little retracement to the upside, the market did that. So that means, so what we are doing right now, we have our bias already. The bias is a downward direction. So we're only looking for opportunities to sell, right? So what if you have a buy trade here? If you have a buy trade here, what should you do? You can have a stop loss on that trade, right? So that when you get a stop loss, then it knocks you out, right? Otherwise, you do a little waiting. For the market to do a retracement. Remember, it has taken out this low, so the market should be able to put in some level of retracement. That re, that retracement may just be the salvation for you if you have a buy here. So you understand what I mean, right? But if you don't have a buy, should we enter a sell right now? So let's see how much the market have done already, whether we should be able to enter a sell. This is USD JPY, and USD JPY can do up to 100 pips in a day. Let's see how many pips it did yesterday. This one, this is 323 pips. So that means this USD still have capacity to trade to the downside, right? Still have capacity to trade to that. So this is just 202 pips, right? Still have capacity to trade to the downside. So, but then a little retracement before you enter a sell will be very important. So a little retracement before one enter a sell. So let me even point out areas where the market may be able to retrace to. So remember, this is an impulsive move to the downside. So the market have left for us some fair value gap. So you may want to enter if the market comes up again to fill out this fair value gap. And this is the best fair value gap, 3 candlestick pattern, all bearish candlestick, 1, 2, 3. So if the market retraces up to this level, then you want to do a sell. So guys, so guys, let's look at gold right now. Gold. Are you ready? If you're ready, I'm ready. Let's look at what instrument gold is doing. Let's look at what instrument gold is doing. So I hope you guys have participated in this gold movement. Me, I participated in it too, and I took something out of it. Let me show you my account history. I participated in that instrument gold. I took something out of it. So look here, I did a trade on Euro JPY, right? That one end in loss. I did a trade on GB on gold, right? As you can see, gold 0.03, right? Now this time around, I did not sell. So that was a buy there. That was 100K. Did a trade on the GBP USD. That was 160 there. So actually, all of this trade is a trade for one day, as you can see, the 18th, right? That same trade closed the same day, the 18th, right? Today is 20th. That's day for yesterday. So you too, you can take advantage of this, the instrument gold that is pumping to the upside. You can take advantage of it. I think the last time I was here, I said gold has given us a rare, you can remember, relatively equal highs. That's the word I used. The that's last week Friday, Thursday. I said gold has given us a rare. A rel is relatively equal highs. Relatively equal highs in the direction of the trend. Oh God, that thing is a magnet. It's a magnet. It's the easiest money ever on this market. Write it down, sir. So you're hearing it for the first time. If the market gives you a relatively equal high, that's one we popularly call double top and double bottom. It can be rare or it can be rare. ROEH or ROEL. Relatively equal highs or relatively equal lows. Now, if that happens in the direction of the dominant trend, okay, find a piece of paper and write it down, sir. If it happens in the direction of the dominant trend, that alone is money waiting to be taken. That means there is up to 95% chance that the market will go in that direction. So all you need to do is to look out for a support. Please, I don't know what I'm communicating. Guys, can you hear me? So if you understand what I'm saying, just type I understand on the chat room. If the market forms relatively equal highs, put in bracket double top in the direction of the dominant trend, it simply means that is money ready to be taken. So if you understand me, Mr. Ekpemsky, you understand that, I say you should write understand. You're writing go on, sir. Write understand. Please, if you understand me, write understand. Or I'm understanding. Anyone. Okay, guys. So God did that for us. So God did that for us. He gave us relatively equal highs. Thank you, guys. Okay, Mr. Kalu, you don't understand. I mean, gold was actually on an upward trend, very powerful one. And we have been saying this gold is getting to 3,000. If it's getting to 3,000, what should we be doing? We should only be buying. So that means look out for opportunities to buy. Somebody said yesterday that gold will just wake up every day and wants to buy. And the person is right. Every day this guy wants to buy because this guy is rushing to 3,000. But remember, there are small replacement along the line, okay? So gold gave us, Mr. Carlo, gold gave us this relatively equal highs, right? As you can see, which is money ready to be taken and in the direction of the trend. Then, of course, it did a little retracement. So once it retraces, you look out for the support. I know one of the things you gain here is all of us here, we know support. Support is the least knowledge, right? The least knowledge, support and resistance is the least knowledge, right? So it gave these relatively equal highs, right? Yeah. And the market retraced, and now it has smashed that relatively equal high. That's what I'm saying. The market have traded above that relatively equal high. So it simply means that relatively equal high shows that the market is coming. It's a magnet. That means it will draw the market again. It's a magnetic liquidity. That means it will draw it back to the relatively equal highs. So that means you take your trade targeting that as our target liquidity. So enough of that. So you understand that. So right now, what's happening right now? The market is rocking that highs, right? It's rocking that high. So for me, I'll wait for the market to do retracement. So these are the areas I would like the market to retrace to. The market should retrace to this level. Now let me delete this particular one because I'm seeing, I don't know if this is actually right, but I'm seeing something. Let me see. Okay, fantastic. This is actually a three candlestick pattern, fair value gap, and all bullish candlestick, because this fair value gap works better if all the three candlesticks are alike. I mean, they are all bullish or bearish. They are all bullish or all bearish. I hope you're understanding me. Fair value gap works better if the three candlestick pattern are all bullish or they are all bearish. If you understand what I mean. So I mean, one, two, three candlestick. If you look carefully, 1, 2, 3, 4 hours time frame, they are all bullish candlestick, and of course, there is a fair value in between. So guys, it simply means I'll wait for this level. So I wanted to point out this week level, this week here, which is also another area. So these are the areas I would like the market to retrace before it buy again. So these are areas where now it all depends on how much capital you have. Okay, so let me go to a lower time frame, 30 minutes time frame. So that means this area, this particular area is an area that if the market drop into this area, then I want to do a buy, right? So remember, I want to buy, but I need the market to offer me some level of discount. Okay, when you get to the market, all of us, we always crave for discount. Madam, no discount today. Yes. See now, yes, Mr. Carlo, you're correct. Can you do this analysis of gold on 15 minutes and 1 hour? Yes, of course. So we move from time frame to time frame. We are looking out for best opportunity. But now don't allow time frame to confuse you. The higher time frame is for directional bias. The lower time frame is for entry. But make sure two of them are in sync. I mean, simultaneously, two of them should be on the same direction before you take a trade. The higher time frame is bullish. This lower time frame is also bullish because we have broken structure to the upside. This is a break of structure here. This is the high we took out, right? Then, of course, we are waiting for a little retracement. That's the retracement, what we call discount. So we look out for fair value gap, an area that may just drag the price down for that. So let me even add the third area where I think may be able to drag the price down for that. So let me add the third area where I think should be able to drag the price down for that, so that we can be able to see opportunities to place our buy on gold. Okay. So this is another area where I think may drag the price down for that. This area, look carefully very well. This area is actually a gap up. Don't forget, gold is on an upward trend and the market is gapping up. So that means there's a force. So, sir, these three areas you may want to what now? You may want to screenshot it. So if the market gets down to these three areas, these are areas where I would like to do a buy. But guess what, sir? What if this market did not get to this area and continue to buy up? Now, guys, gold is rushing to 3,000. But guys, for conservative trading, most of us trade with small capital and leave the main money in the bank. uh, but then you bring that main money into your account, you should be able to trade with a bigger capital. Now, because if you trade with small capital, it means your stop loss has to be very small. So any small shaking in the market will knock you out. Just imagine placing a buy and using a very tight stop loss. The market will kiss your stop loss and continue to go up. So, guys, these three areas are areas that I'm looking at for just a little bit of retracement. Now, how can we confirm that this always works? See here now. See here. Look at this point. The market push upward and retrace to this level, right? So, it actually retrace to this level before pushing up again, right? So this analysis always works because the market would like to do some level of retracement. So the market retrace here now. This is a retracement, right? So the market will always do a retracement before pushing up to the upside again. All right, guys. Back to the comment section right now. So thank you for understanding that analysis. Oh my goodness. So we're all good. We're fantastically good here. So I think it's already 9, guys. Thank you, guys. Thank you very much. So let me drop my number, 0902626. For the guy that said he doesn't know how to draw these lines, right? So, and for every one of us, 09026264507. The name is Emmanuel Odogo, so you can call me MRX Trade. You will not be wrong. MRX Trade, you will not be wrong. So, guys, thank you very much. See you on the next one. Okay, so Euro JPY is retracing. Let me check. Euro JPY is retracing. Where is my Euro JPY? Okay, I've knocked it off, right? So let me check the Euro JPY. Okay, wonderful, wonderful. Says retracing. Fine, fine, fine. So perhaps if you retrace to this area, 1.5 around this area, then you should be able to. So if it gives a good retracement, sir, this is the area I'm looking at. This area I'm looking at. So guys, thank you very much. Bye for now. Join us tomorrow for another exciting section. I hope you got some value from this section. Bye for now.